pips and points. So this is going to be quite an important tutorial because a lot of people get these things confused, and I'd really like to help you get started in the Forex market knowing these things right away, so there's no question about it. So let's look at the 4-digit system to start with. In the 4-digit system, any currency pair has 4 digits after the decimal point. So except for Japanese-based currency pairs, where Japanese yen is the quoted currency, but we'll talk about that later. So the 4-digit system, 4 digits after the point, the decimal point, and the last digit is the minimum change. So the last digit is the 4th digit, and that means the minimum change that any currency pair can experience is 0.0001 units of the quoted currency. So the minimum change is always called 1 point. And this value on the right, 0.0001, is called 1 pip. And that's important to keep these things in your mind separately. The minimum change is 1 point, and 1 pip is 0.0001. So in this case, the minimum change is equal to 0.0001, and that means 1 point is exactly equal to 1 pip. And that's going to be the case for every single currency pair if it is quoted in the 4-digit quoting system. So let's go back to our example of the spread. We calculate the spread as ask minus bid for the Australian dollar, and it was 0.0007 Australian dollars. So let's express this now in points and pips. This is equal to 7 points because it's 7 times the minimum change this currency pair can experience, and it's also equal to 7 pips because this is equal to 7 times 0.0001.